Taimur Baig, Chief Economist Asia at Deutsche Bank, joins us for his perspective on these and other numbers. Morning, Taimur. Good to have you with us on a key day, actually. What's your own sense of the number that will come today? Is it likely to, even be better than what the street is expecting, coming closer to 5 or something?
Well, I mean, I think the print that is coming out tonight would be in the 5.5% range. But if you want to talk about seminal, I think the indications are for another 100 basis points decline for the following month. So the November print, when it comes out, it'll probably be something in the range of 4.5. That would be probably as good as we see in this cycle for inflation print. It'll turn around because of adverse base effect. But as you correctly pointed out, I mean, this would mark basically a 300 basis points decline in year-on-year inflation in the span of 3 months. I don't think India has ever experienced anything like that.
Will that convince the Reserve Bank to move, you think? If yes, when?
No. That's a different story.
Okay.
That's an entirely different story. I think the Reserve Bank has been on the record looking at inflation and the difference between inflation and interest rates as the key factor. Real rates have barely turned positive, and they will remain positive for a while before I think the central bank can be confident about inflation expectations being anchored. So those are very preliminary issues, a long ways to go before I think the central bank can be comfortable about cutting rates.
And what about industrial production, Taimur? First of all, hi, morning. What's the expectation? Do you think it will still be around that 0.5, 0.6% number?
In the 1% range, it's not looking that great if you look at what's happening with core or with respect to capital goods imports. Clearly, there's a big gulf between the market's enthusiasm and what is happening on the ground level with the production front. Not a whole lot happening on the mining side. Some activity on power production, but beyond that, it's still fairly lackluster, mostly a sideways economy.
Okay, so just to get back to the inflation argument, what did I hear? The last phrase you said that the rate cut is still a distance away. When do you see it coming at all?
So I think that it would be hard for the RBI, given what it has talked about with respect to its 2016 inflation goal and so on, and the fact that it wants to focus on inflation expectation, as well as the trajectory of real interest rates, not nominal interest rates. I cannot see the RBI being in a comfortable position to cut rates in the first half of next year. So it's a second half 2015 story, and it would also depend entirely on a whole bunch of things that are very, very hard to predict. What's happening with commodity prices globally, what's happening with food prices, and at the end of the day, has the RBI's tight policy stance over the last 1 year addressed some expectations to some extent? And then, of course, we have to also see what's happening with rural wages and rural inflation. So a lot of uncertainties ahead. Just because CPI has declined for 3 months in a row based on a historic decline in global oil prices and stabilization of food prices is not good enough in my view.
Okay. What about the fall in crude prices and how much that's aided, at least the twin deficits, Taimur? What is your expectation going forward?
Right, and that's a very critical issue, that it is the twin deficit that benefits, it's not necessarily growth. In our econometric analysis, what we find is more industrial, more wealthy economies benefit far more from lower fuel prices as far as GDP is concerned than countries at the lower end of the income spectrum like India. So within Asia, I think countries like Korea, Taiwan, Japan benefit far more, and of course in the US, we see that benefit translate almost immediately than countries like India. So that's issue number one. Issue two is what happens with the twin deficit. Well, on the budget deficit side, they had a very ambitious fuel subsidy number in anyway, right? 0.5% of GDP, 0.6% of GDP. So I think this makes that part of the subsidy budget realistic. I don't see any major upside to the budget given how abysmally low the revenue growth numbers have been so far, and how already in the first 6 months of the year we are at 80% of the budget realization rate. So if anything, it saves the budget deficit, doesn't necessarily improve that. On the current account deficit side, as you can see that from last month's gold import numbers, there are elements in the current account that can cause the current account or trade deficit to worsen, even if commodity prices come down. So we are not necessarily revising down our current account deficit forecast in a very big way. We're still looking at about 1.72% of GDP, that sort of range for FY 15-16.
Okay, what about GDP itself, Taimur? When does the U-turn come? Clearly, we appear to have stopped falling further. The contracting has stopped even in IIP. But when does growth come?
Well, growth is there. We are at 5% range. The question is, when does the growth acceleration come?
Yes.
I think that we're a couple of quarters away. Looking at the CMIE data, a lot of optimism about new projects, but great deal of inertia in terms of getting old projects going or clearing out inventory. So, this is the point that, we have... Sorry, go ahead.
No, please go ahead.
Okay. So this is the issue that we have been flagging for a long time. The difficulties with respect to investment, bad loans, excess capacity that have all accumulated in the last, say, 4 or 5 years, it's not going to go away that easily. So even if one is very optimistic looking forward, that backward drag is here to stay for a couple of more quarters. So till all of that gets sorted out, till we see a proper trade cycle take place, it's hard to see how a sustainable investment recovery can come. And the final complicating factor in that area is also the external demand. External demand matters for India. It didn't matter a lot in the past, but now it does. And we have a fairly anemic EU, slowing China. Rest of Asia is also looking a little sideways. We can't really grow very strong just on U.S. recovery. So that's another drag. So growth acceleration, in my view, is a couple of quarters away. It's not going to happen anytime soon.
Well, Taimur, you speak to a lot of investors and others of your ilk. What is the sense if RBI didn't give a rate cut in December, didn't give it in Feb, I guess December no one was expecting, but actually not even in April, is there likely to be disappointment or appreciation?
None whatsoever. I think there will be appreciation about the sort of steely nature of the central bank. It announced inflation targeting framework at the beginning of this year. There's been a governmental transition. It is still holding forth, and it wants more endorsement and mandate from the center with respect to fighting inflation. And while it waits for that and the legal framework for inflation targeting gets finalized, it stays the course, which is it's trying to hit 6% by Jan 2016 and then go even lower 2016, 2017. And if that is to be achieved, this is not the time to have knee-jerk reactions to couple of months of inflationary developments.
So you don't think FIs will be scared away? And will they be scared away if there is so much political pressure that the Reserve Bank cows down, gives a cut in, say, April?
Right. And the authorities would have to be careful that they don't create this impression that there is a fight taking place between the central bank and the Ministry of Finance. Mind you, the central bank has had significant enhancements of its aura since Rajan took over. I think any pushback on the central bank would be seen negatively by investors. As far as the FII perspective, let's take the debt investors who have parked, what, $20 billion in India in the last 9 months or so. They are looking at it in the long haul. They want to see RBI succeed in inflation targeting, allow long-term yields to come down on a sustainable basis. That is not a function of RBI cutting rates by 25-50 basis points. That's a function of RBI succeeding in inflation targeting.
All right. We'll leave it at that. Pleasure speaking with you, Taimur Baig, as always. Thank you very much for joining us this morning. So that's the view. You will get a very good number today, 5.5, and even better number next month. That doesn't mean the Reserve Bank will bite.